The Dow reclaims the 12,000 level with a killer quarter from Vodafone, pushing European stocks and U.S. futures higher. Markets wait for Greece to name a new interim prime minister, and Italy's Prime Minister Berlusconi tries to hold on to power for one more day. I'm Alix, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Alix with The Street, and together we bring you Morning Call. Scott, let's get to it. It was kind of an exciting day on Monday. I mean, now we have the Dow over 12,000, we have the S&P over that 1260 level. How constructive was the volatility on Monday?
Monday was tough. Monday was one of the gut checks for the bulls. Monday was even a gut check for me. I came in long, about I think 4 to 6 positions over the weekend. You saw the futures down 15 handles, and then by the time we opened, we're only down 5 or 6. So I had to be like, okay, do I lighten up and just be happy that I can manage my positions, or stay the course? And then midday, the market was down about 100 points. We came into that 1235 support level, which was one of the key areas that I said if we could hold 1235, that would be very constructive. We could even hold that 1215 to 1220, and it would have been constructive. So we even held higher than the most important support, showing commitment to the bulls and commitment to this rally.
Well, so I was going to say, real commitment or just short covering here?
At this point, it's well past short covering. You need real buyers to come in to keep supporting a move as we extend higher. And if you look at the chart of the S&P, let me show you what I'm talking about. You know, here's where you had your short squeeze, or here's where your shorts had to cover. When we broke below this low, this was your day to take notice. This was that day that changed, you know, the composure for the rest of the year in October. Here is when we had some commitment to the move. Here's when we broke this downtrend. And now I was talking about this upper wedge. We had those 2 distribution days early last week. We held the 38.2% retracement, bounced up, and then look at this. We held higher. We held 1235 area, showing more support, more dip buyers, not just short covers. And then right now we're opening above this 3-day high area, about 1265. If we can maintain above this for the first 30 minutes to show commitment to today's action, we're going to see a move back to this 1292 area pretty quick.
All right, so if you were looking at, say, 4 to 6 longs yesterday, as well as shorting the spiders for a hedge, what would you be doing today then?
I want to see if I could add some more longs. I want to see if I can go from a tier 1 to a tier 2, tier 3 intraday based on the pattern. So right now, you know, you look at the Qs, you look at RTH, they're still flexing their muscles. You want to see the wedge here on RTH. The retail looks like it's trying to get going, you know, well before the rest of the market. It's right back at these highs. If you look at the Qs, also a leadership area, that's where we should look for new breakouts today. This upper wedge seems like it's breaking to the upside. It's holding higher each step of the way. So there's a lot of good constructive action right now.
So you wouldn't be hedging with a short on the spiders today?
Well, I was short the spiders overnight just in case some headlines came out. I'll probably stay with it because I'm net long. So just in case we pull in, I can manage it. Like yesterday, I was short the spiders. So when we came in, I was able to cover some spiders, add to some longs, and continue to sleep well at night because, you know, just in case there's some kind of headline that hits, you want to have something that you can maneuver.
And to stay flexible. Great point. All right, so let's stay with tech for a second because we saw Google, you know, finally breaking out above that $600 level. What's the line in the sand now? How much juice does it have?
I think it's going to make new highs in the year. We've been targeting this upper channel ever since the earnings gap. Google's been frustrating for the past 2 weeks, but all it did is consolidate. If you look at the pattern here, this rewarded all of my traders, or a lot of them, that was on the radio. Take a look here. This is the price that we were focusing on. We were focusing around $5.99 to $6.02. Here was that earning. You know, this was the move into earnings. Here was your earnings gap. Sideways action, consolidating this big move. A lot of power here. Look, they never were able to fill this earnings gap. And then yesterday, it ignited over this 600 area, and now I think it's going to make new highs above this 625, and it's only a matter of time.
So in terms of the 2 stocks you're watching yesterday, you told me Google and Apple, but Apple didn't really do much. I mean, it broke below 400, hit as low as 396. Does that worry you in terms of tech's strength right now, that Apple just can't hold up?
It just shows you can't be just focused on Apple. There's a lot of stocks moving. There are a lot of quality names looking to make new highs. Apple, I was actually long into the open, and then I got a little short, and then once it came off those lows at the end of the day, I said I'm going to avoid it. And now I'm back to the long side on Apple. Now, if you look at this pattern here, I've been trying to maneuver this range, and this range has been really tiresome. You know, it did hold the lower end. It held the 50-day again. I'm long a little bit. If we can get above this 403, I'll probably add. And then the real level here is at 410. Until we get above 410, it's still trapped here. But if it gets above 410, and starts to negate this earnings gap and starts to get rid of this island top that's staring at technicians, I think it'll be really healthy for the tech sector.
And let's look at some other stocks that kind of went green yesterday. They're showing some strength. One hit on SanDisk closed right near its daily high, like $2 away from its 52-week high. Is it showing that consistent strength like Google is?
Yeah, well, SanDisk, you could continue to buy the dip. We talked about SanDisk a month ago as one of the 8 to 12 names you could own if you want to be long a macro tier 1, for the long haul. And SanDisk pulled into the 20-day. And it held in really well. This is when we started talking about it. This was your trigger when it broke this downtrend, had a big move up. Here is your dip to buy. It held this nice moving average, and it seems poised now to make new highs. If you're an investor in SanDisk, just stay the course as a trader. I would have rather have seen you enter it here. And I think with a bit more time, there'll be a nice juicy momentum trade as it breaks this little area above 54.
So when you say momentum trade, that's obviously just for traders, but does an investor then need to wait till they get some kind of pullback in the names that are on their watch list?
When we go in for a momentum trade, that's when an investor goes from a tier 1 macro long hold to adding cash flow going to tier 2. Because if we're just entering it for a nice trade for a day and a half, that's when they could add cash flow to their position, then take it off, and then continue to hold for the longer term.
All right, good stuff. So then what about MasterCard? Are we looking at new 52-week highs here, and is there that momentum trade for you?
MA's been investment quality. We've talked about it so many times on the show in the past 6 months. Great earnings, holding higher. If you take a quick look at MasterCard, you will see there is commitment here. This right now could be a momentum stock or momentum trade for guys like me, because if it starts to get above this 370, you're going to see an additional move. So this is a good-looking trade besides a good-looking investment if you're still there. And American Express looks good too.
And Visa? Same
yes,
kind of thing?
All three of them are looking okay. AXP, that nice tight range, I think that one goes higher too.
And AXP doesn't have those sort of debit card issues either, so that's kind of a weight off their shoulders too. All right, want to end it up here with CF. Reported a mixed quarter last week, right? Beat on earnings and revenue, but revenue was kind of light, but it climbed steadily higher since then and now showing some kind of strength. How positive of a sign is that it sort of shrug off the negative earnings?
This seems to be one of the better stocks in the agricultural group. It did shrug it off. It had a good move. It's been consolidating. I like the pattern here. CF looks good if you want to have exposure to this area. You've had a big move off the lows, and then it held higher here, and this was that earnings reversal. And now you have a nice little tight flag pattern. If it could start getting above this recent flag, you'll see some more momentum to take it to the highs. If you're an investor, just stay long it. If you're a trader, I think you're going to be playing a quick trade above this 177, and then it's knocking on the door at new highs.
Talking about new highs, we're going to be talking about gold and oil right after this, so stay with us.
Hi, I'm Sean Hendelman, CEO of T3Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
All right, let's get in the trenches here. We want to talk about oil. WTI over $96. It's the highest level in over 3 months. We also are seeing Brent up over $116. Despite all the fears in Europe and all the growth slowdown worries there, oil is just going gangbusters here. Is it going to exhaust itself?
At this point, I thought it would exhaust itself between the 91 to 94.
Yeah.
I didn't think it would be getting, going on the road to 100, but it is, and you don't fight it. So what you don't understand, just stay away from, and there's no need to fight that battle.
And a lot of traders at the NYMEX last week were saying we were expecting 85 before 95, and that definitely didn't happen. I think it's a surprise to a lot of traders.
Well, a lot of smart traders are getting very surprised, so that's why just watch the action instead of the headlines, because charts are setting up, and the OAHs and the XLE are going along with this oil move, because I guess they're saying these companies are going to be profitable. They could keep staying the course, keep pumping out their revenues and their net income.
And I want to just, the sort of showing real strength, or is it a short covering rally? Because if you look at the CFTC Commitment of Traders report for last week, WTI kind of lost about 14,000 short speculative contracts. So I wonder if the first bump of it was now short covering, but what is the next bump now?
Well, now I'll show you the chart of the OAHs.
Okay.
I'll show you when I thought there was a lot of short covering and then when we need to see commitment. So if you look here at the OAHs, you will see this is when it reversed. This was that outside day. And look at this move lower. From here all the way down, this was not showing any type of relative strength. So the first move that was sharp and furious, that could have been a lot of short covering, some guys buying extreme levels here. And then you had a quick move into resistance. And now in this area, I think it's more people positioning, more buyers coming in, seeing the quality, seeing oil not coming down, knowing these companies are going to make money. So above 130 in the OAHs, you're going to see it move back to 135. And if it clears this area, which it looks like it will, you could easily have a move back to 145, 150 this year, which means big gains for stocks that are even showing more relative strength within this group.
And not for nothing, but the IAEA is going to be releasing a report on Iran's nuclear program today, which definitely could be a supply issue constraint, and perhaps they are beefing up their program, in which case there might be military strikes in Iran, and then in which case perhaps their 4.1 million barrels a day they produce might be under scrutiny, I guess would be the best word. So something to pay attention to on the fundamental level.
Exactly. So let's take a look at some of the stocks. What stock do you
Halliburton.
think? Halliburton.
One of the first oil services to have a really big pop yesterday, up over 1%. I want to see if it has more strength.
Let's take a quick look at the chart. First stock up is always a good stock in my book, and here is a nice tight pattern. It also had a decent move off the lows. Not showing leadership as far as other groups where I look with the highs here, but from this area, I'd say above 38, it should be a nice trade up to about 40, and then at some point this year, real resistance comes in around 45. This is in the game. I think that investors could get in Halliburton.
Now, what about a Hess? Because it was the one integrated that was kind of in the negative yesterday versus all the other ones that were slightly positive. Does that have a catch-up play, or is Hess just dead in the water?
Let's take a quick look at this chart. HES, there you go. Another nice wedge. I'm starting to see these everywhere. This had a move off the bottom. It actually is holding above the recent resistance, so it's showing a little bit more relative strength. So above 65, I think momentum comes in, and this could see 70 to 75 this year. I think this is in the game. I like this pattern as long as it stays above this 63 area.
And Apache, like 50 cents away from its 52-week highs.
APA, let's take a look there. Another strong stock. It has the resistance, just like all these other stocks within the group.
I was looking at
APC,
your reversal low, wasn't I?
There, it's okay though. But Apache looks good too.
Apache, then.
This is a little downtrend. A lot of traders are going to be focusing on this group today because they all have similar patterns. When you break a downtrend like this, it typically frees it up for a move higher. And right here above this 102 area, it could get frisky.
Frisky, there you go. Apache frisky. Okay, and BP also had a strong move yesterday, which was surprising because it wasn't able to sell its $7.6 billion stake in an Argentine oil company, which you would think that'd be on headline news. That'd be bad.
Well, this stock has had an unbelievable move. There's actually, I still think, shorts caught in there from the spill. But it just shows how if you embrace adversity and buy when things are in the cellar, so to speak, you can be rewarded. Because look, BP, I don't remember exactly how many years ago that was, but look at this reversal here. Now we're right back to this resistance right around this area. I see a nice wedge pattern here also. Above this 3-day pivot of around 44, could open it up for a move back to 46, and then look how close it is to the highs from last spring. So this stock is in the game for higher prices. This is showing relative strength compared to the other ones that I just watched.
All right, let's get to some other quick ways to make some cash then. You are highlighting two Indian companies. Very interesting. REDF.com had a big surge into the close on Monday.
Yeah, REDF surprised a lot of us. It had huge volume, and I'm not sure what's behind it, but all I know is if the volume's there and the chart pattern's there, I'm going to get involved, which I did. So if you look here at REDF, nice looking chart. I'm going to actually put some volume in here because this volume was pretty enormous on that day. Here's a volume. Let's okay this on my nice little tool belt. Look at the volume that came in that broke it above this downtrend. Now it's been hovering really well. I'm long in this area. I think above 1020 you could add. Then you have 1120, and then there's no reason why this thing can't be 14 at some point this quarter, and that's a 40% move in REDF. This is supposedly the internet provider in India. It's also considered the Groupon of India. There's a lot of things.
Gaming, networking, the whole thing. All right. What about SIFY? I don't know if I'm saying that right.
SIFY?
SIFY? SIFY Tech is an IT company in India. Pretty choppy day and week last week. Are you using that volatility to trade?
SIFY is like the tail that's wagging the dog of REDF. Some stocks move together. REDF is on the move, so SIFY will probably trade alongside it. You could probably be in bed with both of them because look at this pattern, very similar too. Look at the size of this move with volume. Another nice tight continuation pattern above 5 1/4. It can continue to go, but both of these actually, I have to just throw out there, are a bit more speculative. They move around a lot. They're great trading vehicles, so if you're going to invest in them, just know that it's a bit riskier, but there is a lot more reward here.
Staying with a risky stock, let's go to Molycorp. So we're running into earnings. They're reporting on Thursday. How are you trading?
We went long yesterday, nice little trade above 41. I think there is some more room here. You take a look, it's not leading, but it's trying to get above this resistance. I think next area is around 50.
And what about the XLF? Is that creating any kind of base here?
Yeah, it's been holding higher.
Okay.
It's been holding the key levels. It's not a barn burner type of scenario, but XLF held the important support that I was talking about. It also has a nice little wedge here. This was a support area that kept it intact. Above 1340, and you could see a move back to the 14 area in the XLF, and that should be some good movement for JP Morgan, for Wells Fargo, Goldman. So as long as it holds above 102, it can make a move back above 110. So the banks are hanging around.
And let's see two stocks, sort of Qualcomm and IBM, that actually might be good trades and good investments.
Yeah, both of these are investment quality, and they have really good setups. I think IBM setup right now looks great. I haven't traded in a while, and I'm going to look today to see if I could trade it for cash flow, because above this 168 could free it up to make new highs in the year. IBM looks great. It's been holding this uptrend the entire way, hugging it. So if you bought every time on this dip, you did well, and now maybe you get rewarded above 168 for some momentum. And Qualcomm, a little similar to Google, hasn't been in the earnings range for so long, but maybe it's that much stronger. Qualcomm right now, above this, I would say, what is this, 57-ish?
Yeah.
You could see it move back to the highs. Here's your earnings gap. Couldn't fill it. Commitment to the move. Momentum comes in above 57.
Now let's talk about a commodity that might get back to some highs. We've got to go to gold. It's really trying to break past that $1,800 level. It's tried twice, but has not been able to do it. Do you think gold might run out of steam here?
I think it could pause here and then maybe break above it. If you remember last week we spoke, it was that Tuesday when the market was really, really under pressure and gold went positive. I'm like, what's guys doing with gold there? I'm like, they're buying it based on the good book where you get relative strength. You go after it, and if you look what happened since then,
I had that 2-3 day % rally.
Yeah, this was the day. This was the day it reversed. This was a day that a lot of people got back involved if they missed this break of this lower range here. And now look where we are. But look what it's coming into. There's a lot of resistance right here, so it could just hang out, go sideways, which would be healthy before trying to bump through. So if you were long from this day and you never got stopped out, I'd be taking some profits into this area. But if you're a long-term gold holder, stay with tier 1. Don't get out of it, because if you get out of it, it's so hard to get back into it.
And then I want to wrap up with the gold miners, though, because we had the likes of Rand Gold and Newmont making 52-week highs yesterday. Then you have the Gold Corps and the Barracks not really making it. They're close, but they're not there. So I wonder if there's a catch-up play, or if all the gold stocks are going to kind of take a breather here, and you might want to take some profits.
Well, it all depends on the pattern in the company. Right now, GOLD, which you were all over earlier,
Gold,
made new highs, held above the level, and is continuing. I'm just going to show you the charts real quick. Here's GOLD holding above 115, on its way. We spoke about Newmont a few days ago to be a buyer above this 68, this downtrend, and it took off. Just shows you how you could time these things.
So do you want to take profits with them, or you need to wait?
It depends on what you're looking to do. If you're a trader, you always take some profits and you hold some. If you're an investor, they look really good, stay the course. As far as some of the other ones,
like a GG, Gold Corp.
All right, GG, we'll see if there's any catch up here. It's had a nice move also. It's coming back into the old highs. What you could do is see a little sideways action here, let the moving averages catch up, and they could continue. This one was a nice little buy when it broke this downtrend right here, and then you could have even added right around this 50. So on 53.65, it's hard to chase a move of this size, but as long as it stays above this 50.74 and consolidates, it's in the game.
I'm going to squeak in one more stock. Barrick, ABX, really quick. Want to see what the chart tells you.
ABX looks very similar to the one we just saw.
Okay.
It just actually filled the gap. Look at this gap that it had from way back when. Filled it. So usually when a stock fills its gap, it then takes a rest because those shorts were squeezed. So this was a nice void to be long it. At this point, I would take a little bit of profits and then just make sure it could hold above 50, and then it's still in the game for higher prices.
All right, good stuff. So that's it for us for today. Happy trading, everybody. I'm Alix Steele from the street.
And I'm Scott Redler from T3. Make sure to follow us on the virtual trade floor. Listen to the radio. Ideas keep popping up, even that aren't on the game plan. So again, you love the statement, what, 1,000 eyeballs are better than 2? Join the program or just tune in for the recap.